Hi, good evening from Kingston, Jamaica. Welcome to Proven Group's Investor Forum. This is a critical juncture for us in our evolution. We're 13 years old, and we feel that it's important for us to try and continually find ways to get closer to you, our shareholders. This is one such method that I guess that the pandemic gave us, and we're very happy for it. And this is the method that we're going to be utilizing going forward. So from wherever you are in the world, thank you for tuning in, and we hope that the information that you garner from this evening's presentation will help you to feel more comfortable about your investment in Proven. The briefing today will take the form of financial information, giving you repeating the details of the release that we've uploaded on the Jamaica Stock Exchange website, but more importantly, giving you some behind the scenes strategic information that will help you to understand what's going on in our mind as management, and where we see the opportunities and how we plan to execute on them. Before we get into the meat of the matter, however, we've had a very rough 90 days, within the group. I've never experienced something like this in all my working years. We bought Proven Bank Cayman in January, February 2022, and we immediately set about seeking to identify and bring on board a CEO. We went through several interviews, and we came across, the most genteel and the most genuine human being that you could ever meet, in Benjamin Freeman. Ben jumped on board in about April, May of 2022, and took the reins of Proven Bank Cayman. And that bank hadn't made a profit in 7 years. And within 4 months, Proven Bank Cayman turned a profit, and it hasn't looked back since. In about May this year, Ben called and said he wasn't feeling well, and he's going to go to the doctor. And I said, well, you're an old man, you need to go get yourself checked. So we both laughed about it, and he went. Then a couple of days later, he called and said, he had been diagnosed with cancer. Again, we laughed and said, only the good die young. So, he's good. We know he'll live to 150. Again, we laughed about it, and we all expected the best. He jumped on a couple of flights, got the best health care available, and began his treatment. Unfortunately, on August 1, 2023, we lost our dear friend, our fantastic CEO, the most humble and genuine person, part Jamaican, he used to brag, Benjamin Ben Freeman. So, boy, it's, as I said, it's been a rough 90 days for the Proven family. So to kick things off today, I'd like to ask us all to just observe a moment's silence in honor of our fallen leader, Ben. Rest in peace, my friend. Rest in peace. Yeah, all right. Well, boy, as I said, this is a wake-up call that, boy, we have to enjoy the time that we have, and we certainly think we did with Ben. So back to the meat of the matter. Good news. We understated our initial results for the first quarter. So what I'm presenting here, which should be up on the screen, is hot off the press. We got the results from JMMB, and we had initially estimated their earnings, and their earnings came in way above what we had estimated. So we had some discussions with the stock exchange, and given the materiality of the difference, we were encouraged, and we have so to do, present our first quarter and restate our first quarter. So we have done that. It is up on the Jamaica Stock Exchange website. You can download our updated release, or amended release. And as I said, this is due to a better than anticipated performance from our subsidiary, our associated company, JMMB. And so the revised results are, firstly, that net revenue is up to 17.7 million, a growth of 17.3%. No change in that line because the associated company comes below the net revenue line. Where we see the big change is in, I guess, the number that matters, to all of us, is the net profit attributable to shareholders. And that has now moved to $3.88 million for the first quarter, and now a growth in net profit year over year of 122%. So we're very happy with these results. We think that the organization is on a strong path, and we're going to walk you through why we think so. And we think that you're in good hands in your shareholding with us. The additional result of that is that the earnings per share is now at $0.0049 dollars per share. And that's the number that we're zoned in on. Our investment management committee chairman, Peter Bunting, hammers us every day to say we need to double that figure. The dividend declaration remains the same at $0.002 per share. Total assets remains the same as well at actually, no, total assets went up because in addition to the profits that we take from JMMB, we also take a portion of their capital. So their capital went up, and so our capital also went up. That's the figure you see there on the total shareholders' equity, we're now at 140. That says billion, but I'm pretty sure it's million. The capital, the total assets is billion. It's 1.05, but I'm pretty sure that the figure for shareholders' equity should be 140.1 million. I wish it was billion, but we're not there yet. We're not there yet. We're getting there. So, how did we get those results? Firstly, and most importantly, from the acquisition and the work that that Ben did, we were able to deliver a solid net interest income pipeline from our two banks, from the bank that we had already held, which is in St. Lucia, and the acquisition of Cayman. And by the way, both are now renamed Proven Bank. So we're Proven Bank St. Lucia and Proven Bank Cayman. And so those two are contributing the lion's share of our revenue, which is what we want. We want the net interest income, which is a very solid, stable line. We want that to be our main focus, and so we're pretty much on autopilot with our earnings. So that's up 82%, and we, as I said, we're watching that closely. The additional figure that we want to highlight to you is the gross margin on our manufacturing investment. Now, again, just to remind you, we made an investment in Roberts Manufacturing back during COVID, and that investment was, we took 50.5% of the only feed mill and the largest margarine seller on the island. The market share is like 90% on the margarine space. Roberts, a very, very strong brand in Barbados and the Eastern Caribbean, and we're seeing excellent results over the first quarter from that investment. We'll speak a little bit more about that. Narisha is going to join me, and she'll give you a little bit more details on that. But we want to highlight that gross margin figure is climbing nicely, and it's now up to 21.7%. The additional figure that we want to bring your attention to is the profit we're making on our properties. So the gross profit on sale of properties is climbing nicely, and that will vary depending on obviously the stock of properties that we have available. But the margin is what we want to make sure we're getting wider and wider. And Aisha, our CEO for properties, we're going to introduce it to her tonight, and give you an opportunity to hear from her on. We've knocked it out of the park, largely due to the performance of Aisha and her team on the properties side. Our brand is very, very strong. We've seen, sold out after sold out after sold out developments, and Aisha will give you a little bit more color on that shortly. Additional information, the bad news is that our fees and commissions are down 15.2%. I'll speak a little bit more on that, but absolutely we're laser focused. We're gonna fix that. So in a little while I'll give you some more information on that. That comes largely from our Proven Wealth franchise, and so I'll give you some more information on that. And then, what I just outlined in terms of the share of profits on associates, JMB is doing well. We do want some more dividends from them. It's one thing to deliver the profits, but we want the profits to come over to us. So we'd like them to pay us for in cash for the profits. And Narisha will give you a little bit more color on that when she comes up in a little bit. All right. Next up, the net profit breakdown. So where exactly and how exactly are we looking on that side? The major line, which our honorary chairman Hugh Hart is in the back of my head, nagging me. He would always zone in on this line, and I know you don't see it here, but we promise you are going to see some improvement on the operating expense growth. We don't want it growing, we actually want it shrinking. We're zoned in on that, and we think we've identified some efficiency opportunities, obviously primarily driven by technology, and we'll speak a little bit more about that when we break into the per segment presentations. But we know even before we take your questions, we know you're gonna zone in on that line, and you're gonna ask us to cut that line, because that's the big killer, operating expenses. But just go back from it. So as I said before, the net profit is going in the right direction. We have identified 2 or 3 areas that we want to fix, and we're going to talk to you about that right now. So good news, profits are up 122%, and we're gonna talk to you about how and what we're gonna do to keep it growing at that pace. All right. So now, to remind you of who we are, we're 4 pillars. This is what your company is, your group of companies. We're settled on that. We're wealth management, and we have done the hard work of rebranding everything under Proven. So we're wealth management. We're going to be laser focused on that across the English-speaking Caribbean. And right now, we have wealth franchises in Jamaica, Cayman, Bahamas, Bermuda, BVI, and very shortly, Barbados. Those are the jurisdictions that we're going to set up the wealth space. And on the right, the region 2 is Jamaica and Bahamas. On the left, which is region 1, is Barbados, Bermuda, Cayman, and BVI. So we've split the wealth franchise into 2 regions. Luana Williams heads region 2, and Simona Watkins heads region 1. Simona is based in Cayman, Luana is based here in Jamaica. So that's our wealth management platform, and what we want to do there is continue to grow fee income. And the primary method to grow that fee income is fund management. That's what we want to be known for. We want to be known for the best fund fund managers in the English-speaking Caribbean. So in order to get that done, we moved on that about 2 years ago with the acquisition of the Heritage platform. Now, when we acquired the Heritage product, we got two things. One, we got a new product with a good size and client base, and then importantly, we also got a sales force. We got a lot of agents island-wide in Jamaica that we can utilize and grow and train to sell our funds, not just the Heritage Fund. So look out for more innovations on the fund side and look out for continuous growth in our army of wealth advisors, beating the turf right across the region, selling our various funds. So now we're doing that in Cayman. We're building out the wealth advisors in Cayman. We're doing that in Bermuda. We're doing that in BVI. We haven't touched Barbados yet, but we're going to touch Barbados. We have about 50 agents, advisors in Nassau and Freeport, and we're going to build that out. And of course, we're doing that here in Jamaica. So we want to zone in our funds, sell the funds, get the returns to the investors, and we take a management fee. So that's the wealth model. Let's go back, okay. Banking. So that's the second pillar that we want you to understand. Banking is a very attractive space. You have what we call the domestic banking environment, and you have the international banking environment in the Caribbean, in the English-speaking Caribbean in particular. And we did, thorough analysis, and we feel that the international banking markets are a better, deliver a better margin on every dollar. With the domestic banking markets, primarily the high population areas, Trinidad and Jamaica, you come under a lot of pressure for service, for branch network, for in IT infrastructure, etc. In the international banking jurisdictions, which are typically the much smaller islands, Cayman, St. Lucia, BVI, Bermuda, to some extent Bahamas in the English speaking, and then Aruba and so on in the non-English speaking. Those markets, easier to manage, very small populations, and they attract international depositors. So that's the area, that's our sweet spot. We want to stay in the international banking jurisdictions. And so we've done that with St. Lucia. We executed on the Basel acquisition back in about 2017. That's been phenomenal. We've gotten excellent return on equity on that investment. That's continuing, nice and easy, comfortable operation. And then we acquired Cayman, as I said earlier, in January, February 2022, and we're doing the same. That's very comfortable, nice, quiet, branch operation, not a lot of noise during the day. Clients are just walking in, getting their transactions done. They're heavily online, in those markets. So it's a very, very quiet and comfortable business operation. So that's the space. So those two, we're settling down Cayman nicely. As I said, Ben, before he passed, had already turned that operation around, and that operation is delivering for us solid profitability on a monthly basis, and we're getting, I would say mid-teens return on equity right now. We think we can get it up to 20%, 22% return on equity, and we know we're going to have to take the legacy from Ben and run with it. What's the plan? The plan is for me to take the acting CEO role. I've applied to the regulators for them to approve me, and we're gonna, sit with that for a little and digest this loss. In terms of the country operations, we're looking to appoint a country manager for both. We already have, a country manager, a chief operating officer in St. Lucia, so that's good. What we're trying to do is set that up in Cayman. I'll go back and forth, but at least on the ground on a daily basis, we'll have somebody that's in charge. So that's the plan. We've written to the regulators. We're waiting on them to respond, and we do think that they will approve that plan. And if that is the case, then we should be settled and ticking along nicely. We haven't had any challenges, operational challenges during Ben's illness and since his passing. The team there, have been fantastic. Ben really, did a fantastic job, not just in turning it around, but also in developing his second and third tier, and they've just kept it ticking. So, I go over to Cayman. I'm now in Jamaica. I go over to Cayman again next week. We have the memorial service for Ben, and I'll stay a couple of days and just settle things down with SEMA, and then I'm going to just go back and forth in the meantime. But those two banks are solid, no issues there. All right, properties. Aisha Campbell, are you on?
Yes, I am.
All right, so I'm going to kick it to Aisha, and Aisha will walk you through the properties. This is her debut on this platform, so welcome, Aisha. Try not to mess it up, because I already set the standard, and I know you can't match it, but try your best.
Good evening, everyone. So quickly, properties, as Chris said earlier, we've been up to a lot. We're really excited about our portfolio. This quarter's earnings and profits were primarily driven by our development in Grand Cayman, the Lagoons, and that's 13 townhomes that we did in that jurisdiction. Our first project in Grand Cayman, it was really successful. We're excited about that. And just to speak about last year, we had our VIA, our Cesar projects being completed. And in the pipeline, we really have a lot going on. We have two of our projects on the North Coast, St. Anne, Saul Harbor, and Bahari. And you can see the pictures right there up on the screen. Those projects are underway. We're fully in construction. We still have a vista that we're at the tail end of. We'll be completing that in the upcoming quarter and hopefully starting to hand over units to our customers. And so that in itself is really just a groundbreaking project in Mandeville, first of its kind. And we're really happy to be at the last stages of it and having actually completed it successfully. And then we are going to continue to focus on building out our warehousing. So the logistics sector is one that we are focused on. We think that there are great margins there from a rental perspective in our rent lease portfolio. And so we've acquired the Ashko warehouses in Grand Cayman, and we're also going to be starting construction on our warehouse project in Jamaica off Spanish Town Road. That's a joint venture project with Sage. And finally, we hope to be moving in as a group to our head office, our new home, Proven Place, that was under construction, and we're at the tail end of doing the fit out for that project, and we should be moving in within the next quarter. So we'll be one big happy family, right, Chris? All consolidated under one roof. And so we're looking forward to that. Yes. And then if you had looked at the launch of Grand Cayman development, we actually just acquired another piece of land in Grand Cayman. So we'll be looking at starting the planning and development for that development because we are excited about the Cayman market.
All right. I think that Aisha, I think the big takeaway I guess you should tell the shareholders is not to expect any significant revenue from you until what, the fourth quarter?
Yes. So because because of the nature, as you said earlier, of development, we only will be booking revenues and by extension the profits once we've fully completed, handed over, etc. And that really won't start to come into our financials until the fourth quarter of this financial year.
Okay, okay. All right. So she's working, shareholders. She's working, but you're just not going to see any revenue from her until she closes off a development and hands over title.
Correct.
That's when we can register it. So thanks, Aisha. Congrats on the great work that you've been
Yeah.
doing. I really would like us to recognize Aisha. She's been with us now for 5 years and really transformed this properties area and has delivered iconic development after iconic development after iconic development in Jamaica, in Cayman. She's going into Barbados shortly, and she's doing a couple more in Jamaica and Cayman. So big up yourself, Mrs. Campbell.
Thank you, Chris.
All right. So, woman rule proven, woman rule proven. So next up we have the head of our proven private capital space, Mrs. Farquharson. I don't think I've ever called you by your surname. But over to you, Mrs. Farquharson.
Thank you, Chris, and a pleasant good afternoon to everyone online. No, so I'm gonna do this very quickly. A brief update on Private Capital. The division consists of a portfolio of private credit facilities and three portfolio companies, namely, we have Access Financial Services Limited, where we're the second largest shareholder with 24.8%. Then we have JMB Group Limited, where we own 20% of that business. We're the largest single shareholder in that entity, actually. And lastly, we have Roberts Manufacturing Company Limited over there in Barbados, where we own 50.5% in partnership with Answer McCall out of Trinidad. Now, the private capital division continues to demonstrate resilience amidst, a very challenging environment. We saw where we had, a roller coaster ride with commodities, interest rate rising. Quite frankly, the environment displayed what I would call classic textbook risk off features. Notwithstanding this, however, the division expects improvements in overall operating efficiency across all portfolio companies. Um, this, we think, will be facilitated by an uptick in asset prices as of course, interest rate moderates over time. And, this will result, or we expect this to result in positive forward-looking performance for the division. So, bright days ahead, I think. That's my quick update at this point. So over back to you, Chris.
Yeah, I think just to highlight, just to stay with Narisha a little bit more, just to highlight that, Narisha, you mentioned it, but just to let the shareholders be clearly aware that
Right.
the commodities, the management of the commodities market is not easy. So if what kind of price reduction, percentage price reduction have we seen on, say, shipping and on commodities over the last 12 months?
Well, as you know, that has been very volatile. At one point, shipping prices just increased astronomically, and we have seen those come down by about 30 to 40%. Yeah, very significant. The commodities prices, they're still elevated. They're nowhere near, the 10-year average, but they're coming down gradually. And we believe that with sustained recovery in the global macroeconomic landscape, we should see, some tempering of conditions. Just recently, we saw where the Black Sea Agreement ended, and you would have expected to see a significant increase in commodity prices, but we have been seeing some downturn because of conditions improving in the US. So I believe better days are ahead. Robert, specifically, we have been very laser focused on how we manage our commodity prices. I'm happy to say that we have a firm handle around that. Our CEO, our new CEO, he says, Narisha, I'm almost a commodity trader. But it's something that we take seriously, and we realize that it's important to stabilize our gross margins and give us the competitive edge in the market. So
Yeah.
we're laser focused on that.
Yeah. And we're seeing it in the results from Roberts.
That's right.
Yeah. And then how is your relationship with management at JMMB? We're not on the board, but how's your relationship with management?
Well, pretty good. I mean, we speak to them. As a publicly listed company, there are certain parameters that we have to maintain. But that relationship, I think, is good. As Chris said, um, profit profits are cash flow is a fact, and profit is an opinion. So we would like to see some more dividend coming out of GMMB, but I believe over time we should see some results where that is concerned. But for now, we're nurturing that relationship as we look to optimize the value there. Yeah,
Yeah.
not sure if you have
But then
anything to
and
add.
then access is I guess the opposite. We are still the majority of the board on that. Is that what you're on the board? Who else is on the board?
Charmaine, but Charmaine is somewhat independent. So I wouldn't say, I think it's balanced. I think it's balanced. We sit on the board of Access, I think we're nurturing a good relationship there. We currently have, as of April, we signed a management consultancy agreement with Access to assist with, the strategic evolution and growth of the business. And so we're doing some work there in conjunction with the CEO. And we're seeing results. We're happy with what's happening on the top line, the revenue line. However, I think there is a lot of work to be done on the operating side of that business. So Chris and I, we're working closely with management to drive efficiencies such that the business can deliver some value.
Yeah. All right. Thank you. And keep up the good work. I mean, I think what Narisha, outlined, and I want to make the point on is how well and resilient our private capital portfolio has done for us. All three are delivering, solid profits. When you take a look at the share of profit line in our results, you'll see that it's a very strong contributor to our overall performance. So, great job, Narisha. Good investments and good management of those investments. As it relates to the value carried on our balance sheet for those investments, boy, that's such a subjective exercise that we have to go through annually with our auditors. And one of the key variants of that is the risk-free rate. And as interest rates have gone up globally, and that's the basis on which the risk-free rate is determined. So because that the risk-free rate has gone up, the rate that they discount the value of our investments at has also gone up, and that has resulted in an impairment of a couple of our investments. But we don't think that the fundamentals of the business has changed. We think that, obviously the risk-free rate has changed, and that goes up and down depending on global market conditions. And so the impairment can reverse, and it's done annually. And we think that, better days are ahead with the analysis of our impairment, based on where we see the interest rate trajectory. But as she said, we're laser focused on working with all three. We're not on the board of JMB, but we have a great relationship. We speak to them quite frequently, and on Access, we're very, we're speaking to the CEO daily, trying to get the operating expenses down. Roberts, the same thing, but Roberts, we've just put in a new CEO in April, Rakesh, and he's knocking it out of the park. So we're very happy with our private capital side. So just to repeat, profits up 122%. We're coming in the region of 3.88 million, and the major revenue drivers, we can pull that slide up. The major revenue drivers are, firstly, the net interest income, which comes from the bank. And that's very solid. That's the best of all our pillars. That's the best one. That pillar, Ben literally took that one from fourth place, bam, right up to to first place. So the banking pillar is delivering solid, predictable profit numbers, net interest income numbers. The second area on the revenue stream is the share of profits from the associates. And as Narisha said, we don't see any problems with any of the three investments that we hold. And we're, yes, the share prices are under pressure, but that's the nature of the interest rate trajectory. So no need to panic. With the share of profits are going in the right direction. The fundamentals of JMB, Access, and Roberts are solid, and so we're not panicking there. On the properties side, quiet sale year for Aisha, but she's doing a lot of construction. So next year she's going to be hitting the P&L hard. Sol, as she mentioned, we broke ground on it, I think in March, and that's sold out already, and that's 176 units in Ocho Rios, and we have Bahar in Runaway Bay, and we have 2 warehouses, one in Kingston, one in Cayman, and we have a commercial development in Barbados that we're closing in on. So she has some really good projects, a great demand, great sales to come on those. So, we're happy with that. Where we have the challenge and what we're going to zone in on. By the way, they're on leave. That's why we didn't present wealth today. That's why, and they're ladies as well. So again, the ladies rule. The CEO for Region 2, Luana, she's traveling, and Simona is also traveling. So they're both on leave. So next investor briefing, they'll present their areas, and so you'll get perspective from them as well. And then as I said before, I am acting right now as the bank CEO. So that's why I led that presentation. But on the wealth side, we're going to have to do some work. We're going to have to do some work. Both Region 1 and Region 2, we're going to have to step up, and we're zoned in on those two regions, and we're trying to get them to the level of performance that we believe they're capable of. So more and none on the wealth side. All right, so that's it. I hope the information presented today will make you feel better about your investment, and will make you want to stick with us on this ride. It's been 13 years, and I know for me it has been 13 fantastic years, and I'm excited and ready to do another 13. So, I'm happy to continue to be your group CEO, and hope you will continue to have me, and we'll make this ride enjoyable and profitable. I will now open the floor for questions, and how is this going to work? Okay, they're gonna read it to me, and you guys are seeing it. Okay, fine. Let's go.
Most wealth management firms charge their clients a fee based on the percentage of assets the bank manages for their clients. So the bank measures their success by how much growth there has been in assets under management or administration. Is this the business model that Freeman follows? If so, how much assets do you manage, and did it grow this quarter? If this isn't the model you follow, then you can kindly explain in more detail the business model of Freeman Wealth.
Okay, so let us just walk you through this, and the straight answer is yes. That's what I said earlier. We want to grow funds. Same thing you're saying. We want to grow assets under management. I use the terminology funds. You use the terminology assets. It's the same thing. Yes, we want to grow that. Now, just to be clear, and because different words were used in that, and I don't want us to confuse the words. So firstly, the company that's listed on the Jamaica Stock Exchange is the group. So it's Proven Group. I'm the group CEO, and we have a wealth management company in Jamaica, in Cayman, in Bermuda, in Bahamas, in BVI. It is the wealth management business that does fund management, and that therefore follows that business model. So the wealth management business, yes, we want to grow the funds, the assets, and we charge a fee for the funds, and that fee is what hits the bottom line. So yes, 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 that's what we want to do in the wealth business. But so just repeat the question, because I heard a reference to bank in the question.
The bank measures their profit.
Right. So no. So remember now. So we have a bank separate from the wealth business. So the bank doesn't do fund management. The bank takes deposits, pays an interest rate, and then we lend those deposits and make a spread. So no, the bank, that's not the business model for the bank. So we have different businesses. We have the wealth. That is the business model for the wealth. The bank has a separate business model, so it's not one of the same. And then the final reference is that the business model of Proven? And just to repeat and to put up back on the screen, your company, Proven Group, our business model is the pillars. Put up the 4 pillars. Our business model is these 4 pillars. So we do wealth management, which is the same thing you referred to. sell funds, get a fee. We do banking, and I said it, the international banking, Cayman and St. Lucia, we offer traditional banking, you know, checking account, savings account, fixed deposit, credit cards, you know, yada, yada. And we do mortgages and so on. So that's banking. Then we do properties, which Aisha spoke of. And then we do private capital. And private capital is where we invest in businesses that we think can give us an above average return. And the three businesses that we have invested in are Access Financial, JMMB, and Roberts. So this is our business model for the group. Next question.
What are some of the strategic plans designed to increase the revenue generation performance of the advisors at Proven Wealth?
No, great question. The industry, and I've been a part of this industry for almost 30 years. I started at like 2 or 3, you know. So, you know, as a kindergarten prodigy, but the business started out as a securities dealership. So you would sell clients securities, and those securities are either stocks or bonds or funds. Well, we started out primarily with stocks, bonds, and repos. Eventually, funds started to come into the mix. What I said earlier, and what I want to reiterate is, we want to shift more from securities dealership to fund management. So we want our advisors to sell funds. So instead of, you know, everybody we come across, we try to sell them, you know, $50,000 in stock or $50,000 in a bond, which drives up our operating costs. We wanted to sell them a fund. So we just say, you know, buy, you know, an education fund or buy a that fund. So the fund administration is way easier. So it allows us to maintain a more nimble operating model. So we want to shift from a securities dealer to a fund manager and sell primarily funds. So that's what we want our advisors to focus on, selling funds.
Okay, so you have persons who are congratulating Chris and the team for a job really very well done. Some persons are joking that you started when you were a baby. The next question is, do you have any plans to increase the shares held in both Access and JMB?
Okay, that one is easy. There's a man named Peter Bunting that, you know, is in my dreams. No, we're not. No, my chairman of my investment committee, you know, has both of my hands tied behind my back. We can't do anything, you know, big right now. We have to get the existing businesses very, very, very profitable. You know, as I said before, you know, he wants EPS to double from the existing businesses. So we're not looking for any major investments, and definitely not taking a bigger position in Access nor JMB.
All right, the other question is really for Aisha. What is the expected completion date for South Harbor, and are units still available? So we're going to bring
Okay, so the expected completion date is December 2025. And right now we do not have any units available on the market.
Excellent.
All right, good job. Next
The other
up.
question
Yeah, that's tough. I mean, I hear the same thing Leachin talking about. It's tough. It's tough because there's a minimum operating standard, that you have to have. You can't cut, bone, as they like to, say. So we're trying to establish that, so, I don't have all the answers at this time. Where I'm actually meeting with a subcommittee of the board tomorrow. So we're trying to to figure out how we use technology to drive operating procedure so that we're able to, at the very least, scale income without scaling expense. I think that's the first thing we want to do. If we're able to do that, operating expenses as a percentage of revenue will fall. So that's our first objective. And then, reducing costs is the second objective. The major costs are obviously staffing and technology. It's anywhere you turn, Makajukyo. Because you go technology, you have to pay all these licenses and fees and all of that. So that's that has a cost. And then so it's a balancing act. But I would say it's 70% revenue growth and 30% expense management. So we have to win some business. We have to win some clients and win some business.
The other question is for Narisha. If there are any pending acquisitions for this financial year? Narisha?
Yes, Belinda. I think Chris spoke to that. We're getting calls and we're looking at opportunities as they come. I mean, I can't say definitively something very compelling comes our way that we can't resist. Fine. But for now, we're laser focused on creating value in our existing investments, such that we can deliver dividends. I saw one comment to say that we want more dividend. That's what we're trying to do. We're trying to increase the cash generated from our businesses so we can pay our shareholders. So we continue to get the calls, we continue to assess, to look at the opportunities in a very forensic way. And if we hit the jackpot on one, probably Chris will come and announce that we have a new deal.
Yeah, I agree. We're looking at everything, but we have a much higher threshold for deals right now. So it would have to be, as Narisha said, it would have to be something spectacular.
The other question, of course, you're getting compliments again. They're really feeling better after this presentation, and we're thanking you for that. Is asking if you have any plans for a bank in Jamaica.
No, that's an easy one. That's an easy one. That's an easy one. Can I say hell?
No.
So bleep, bleep, bleep? No. No. Jamaica is very competitive. And of course, as you know, the operating costs, just security alone. When we go into the bank in Cayman, we have to look hard for finding the security, So no, we like the international banking space, those markets. As I said, the beauty of those markets, we're still a domestic bank in those markets, but the beauty of it is that it attracts global capital, even though the population base is small. So as a result, your operating costs are low, and so you get a better margin on the dollar. So no, we're good.
Well, I'm not seeing any more questions.
All right. So thank you. Great questions. And listen, we're shareholders too. We're shareholders too. we firmly believe that we must pay our shareholders first. So we are laser focused on getting cash EPS up. Cash EPS. I had said EPS earlier, but let me correct that. We want to get cash EPS up so that we can pay it to you. And we have that is a simple business model, business plan I have on my desk, and it's a one-pager. Get cash EPS up and pay out, whatever percentage of it to your shareholders. That's what we want to be known for. We don't want to be a trading stock. We don't want to be a trading stock. We want to be an income stock. We want you to, just collect your dividend and see it more like an annuity, So we're going to put in the work. We're determined not to let it down. We have a fantastic team. You heard from Aisha, you heard from Narisha. You missed Luana and Simona, and we're gonna make some adjustments on the bank side and get somebody else there. And then behind the scenes you're not seeing Johan and Charmaine and so on. So we're all at the table pushing, and we thank you for sticking it out with us over the last 13 years. We're not going to let you down. All right. So have a great rest of the evening, wherever you are in the world. Thank you for tuning in. We're going to load it up on, the various platforms so you can share and rewatch and so on. And again, we restated our first quarter. So, log on today to our site or to the Jamaica Stock Exchange website, get the updated release. The number now is 122% up, 3.88. Back to work right away to give you some news for the second quarter. Have a good evening. See you soon.